So we just got the latest data on the UK economy, the state of the economy, GDP. Here it is. This is showing you the big picture of gross domestic product, the size of the economy. It's the level here. You can see the pandemic there, that big fall. And the latest numbers show it's 0.2% growth in April. But the thing I want you to focus on is basically that line. We're kind of back at pre-pandemic levels just about. But essentially, we're flatlining, and most economists think it's going to carry on that way, not necessarily shrinking, but if there is even a slight deviation, we could well be in recession. And the reason that matters is, well, look at what's happening in the mortgage market right now. Now, these are the average rates that people are paying if you're refixing your mortgage. 5.54%. This chart goes all the way back to the 1960s, you can see there. A bit higher for two-year rate mortgages. And it doesn't look like it's very high, does it? That line over there. But highest since 2008. But here's the thing, you've got to adjust for the fact, these are just the headline mortgage rates, adjust for the fact that you have higher mortgages right now. People are more indebted, they have lower incomes in comparison with their mortgages. Adjust for all of that, and it's a very different picture. You get a very different line, an effective rate, really showing the burden that people are facing, going all the way back to the 1960s. And have a look, where we are right now is actually the highest since 1991. And remember, 1991, official rates were up at 13%. That precipitated a housing crash, a recession. Well, we're kind of getting up towards those levels right now, and we might get there. We might even exceed it. Why? Well, have a look at what's happened to interest rate expectations. So this is future interest rate expectations for the Bank of England. They've gone up an awful lot because inflation has been a lot higher than expected, a lot higher than the bank expected. By the way, they've just announced they're going to do an external review of their inflation forecasting in the face of criticism. This is what was expected only last month. So rates were going to peak around 4.75% in the next few years. Just look at how that's changed. Now the expectation is they're going up to 5.75%, so closing in on 6%. By the end of the year, the turn of next year. That is really high, and that's yet to feed through to those mortgage charts I showed you a moment ago. So things could get really tough for you, particularly if you have a mortgage.